tax cuts for the middle class. Will they pay for themselves, as Secretary Mnuchin thinks they will, or are they going to blow a bigger hole in the deficit?
Well, I wish I could be more optimistic about it, but I think the track record of the tax cuts implemented at the end of 2017 is instructive here. While I wish I could agree with the Treasury Secretary, clearly the track record that we've had since those were passed has been one of increasing deficits and of an economy that did not respond the way that the administration projected it would to those tax cuts. Essentially, we got 2 strong quarters of business investment right after the tax cuts, and then it has not only gone back to normal levels, but actually has declined the last couple of quarters. Now, that's certainly attributable in part to the trade uncertainty, but the fact is that whatever excuses you might make, the deficit is deep and getting deeper, and it is unlikely that another round of tax cuts will make that any better. I would also add, just having been in Washington last week, that the politics surrounding that tax cut proposal suggest that it has very little chance of passage.
That said, there does seem to be bipartisan agreement, Carl, for an infrastructure spending package. If we do see tax cuts or a combination of tax cuts for the middle class and an infrastructure deal, then can we take up the growth rates and the growth forecasts from sub 2% right now? And what would they look like under those conditions?
I've been saying that an infrastructure bill would be an excellent idea for the United States. We do have aging physical infrastructure, and then you talk about the electric grid and the infrastructure around the internet. That all needs to be reinforced. It's the kind of investment that would not only help economic growth today, but also over the longer term. Frankly, I'm surprised that they haven't done anything on that front to this point, because it's one of the rare issues on which Democrats and Republicans can agree. I still don't think that there's enough time in the legislative calendar here in 2020 to get that done. I would also add one last thing on the budget, which is that there is no urgency to bring revenues and expenses closer together, because right now the penalty seems to be non-existent, with U.S. interest rates still very, very low.
Is the cyclical rebound in jeopardy, Carl?
So I think the U.S. economy has proven remarkably resilient. The trade battle has probably hurt China more than it has hurt us, but it has taken a toll on America's factories and farmers. But I have to tell you that the U.S. labor market is in a better position today than it has been at almost any time in the last 50 or 60 years. The job creation and the income creation on the back of that has buoyed consumer spending. The tallies are not complete, but it looks like the holiday retail season was a very good one. And that's projected to continue through the course of 2020, even though uncertainty from trade and the election could be severe.